there. Welcome back to the Beyond Wealth Advisors Economic Update, June 2025 edition. I'm John Cleaver, partner and senior financial advisor.
And I'm JC Ganote, a financial advisor at Beyond Wealth Advisors. And today we're going to be breaking down inflation, what causes it, where it's at now, and what we think could happen next. Because let's be real, the headlines are all over the place about the topic of inflation.
You know, JC, you are exactly right. 1 minute, inflation's dead. The next, it's look out, it's back. So let's unpack, what's actually driving the inflation numbers right now.
Let's start with a little history lesson. John, if we go back to the early 2008 financial crisis, remember how everyone thought all of the money the government was pumping into the system would lead to runaway inflation?
Yeah, that was a crazy time for sure. I mean, people were throwing around terms like hyperinflation, like this was like guaranteed, like that never happened. Why? Because even though the government printed a ton of money, interest rates were essentially zero, banks weren't actually lending that money out. It actually just kind of sat there.
You're right, John. The money supply, or what the economists call the M2, which includes stuff like checking accounts and savings, was growing, but at a pretty normal pace, around 6% a year. So inflation stayed tame.
Yeah, and if you think about it, it really kind of maintained that for a number of years. Fast forward to 2020, boom, COVID hits. Totally different story. The government was sending out stimulus checks. They were forgiving loans. They boosted unemployment, loosened rules on how much cash banks could have on hand. And that's really when things changed.
And that's when the M2 really spiked, like big time. Suddenly there was a flood of money in people's accounts and businesses' hands. And surprise, that's when inflation started shooting way up. We saw it in everything, gas, groceries, cars, and it all peaked in the mid-2022. Inflation hit 9%. That's the highest we've seen in almost 40 years.
To think that was just 2 years ago, right? But here's the thing. That money surge didn't really last. Basically, by the end of 2022, it had flattened. Since then, inflation stayed pretty steady. In fact, inflation's come down overall. If we look at the consumer price index, today we're sitting around 2.3%. That leaves out food and energy, which is closer to 2.8%, way down from the highs. And if you look at just the last couple months, inflation's been running even cooler, closer at about 1.6. So what's up with that, JC?
Interest rates. The Fed's been holding them high, especially the short-term rates. And when interest rates are higher than inflation, that's called a positive real rate. It cools spending and borrowing, and that helps keep the inflation in check. Now, some people are asking, wait a second, aren't we also seeing more tariffs now? Shouldn't that be pushing prices up also?
JC, you weren't supposed to say the T word. Come on. Great question. The answer is a little counterintuitive. Tariffs can raise prices on some specific items. We've seen it on like steel or electronics, things like that. But it doesn't actually mean that overall inflation goes up. You may be asking why. Well, when people spend more on one thing, they often spend less on other things. So yeah, that doesn't really move the total level of inflation that much. It's kind of like shuffling the cards of a deck. It changes the order, but not necessarily the number of the cards.
That's so true, John. So what does this all mean for where we go from here? Inflation's down, interest rates are high, and the economy's starting to cool. A lot of people think the Fed should start cutting rates just a little bit right now.
Yeah, we certainly hear about that on the news cycles for sure. I think at this point we'd like to see maybe 2 small cuts, 25 basis points each. The economy doesn't really need that kind of emergency level rate cut, but it could take a bit of a breathing room. The challenge is the Fed continues to be hesitant. I know they're watching things like tariffs, political uncertainty. They just don't want to take their foot off the gas too soon.
But from where we sit now, John, inflation's not gone completely. It's under control for now.
Right.
But the real risk would be if we flooded the system with new money again.
Right.
That's what would bring inflation back in a real way.
Yeah, just like we saw previously. So, I don't know, what do we do with all this, JC?
John, I think there's 2 things. First, we stay calm. Inflation isn't something to panic about right now. And second, keep an eye on the interest rates. Remember, the money supply not just politics or price tags, it's what really drives inflation.
Yeah, that's well said. All right, so that's it for today's episode of the Beyond Wealth Advisors Economic Update. We certainly hope you found this to be helpful. We'll be back next month, maybe take on a couple new topics. And certainly if you have questions, we always encourage you to reach out to your advisor. I'm sure they'd love to talk to you about inflation in more detail, right?
Oh, for sure. That's always a hot topic, John.
Absolutely. And well, thank you, and we'll see you next month.
Thanks, John.
Yeah, appreciate it. Appreciate you.